are missing what Powell was saying at the beginning, which was very troubling to me.
The beginning of the speech yesterday.
He starts talking about non-bank lenders. Okay, so there's what, about 1.6 trillion in mortgages last year, banner year. Do you know that 50% of mortgages are now made by non-bank lenders? And when you speak to the major banks, they tell you, look, we don't really know about these guys. The Fed has been lightly enforcing the non-bank lenders. What happens if housing goes down more than the 3% that it went down yesterday? What if we start hearing what Redfin and Zillow have been saying, Redfin being a terrific company about, you're going to see that housing prices going down pretty heavily.
The mortgage crisis 10, 12 years ago. I've done a documentary, if you haven't seen it, called House of Cards. Those non-bank lenders figured so prominently. Irvine, California, of course, where so many of them were based, whether it was New Century or Countrywide. Well, they were the ones who took the lending standards down, Jim, and that did contribute to what ended up being a worldwide problem when all that stuff got securitized and then securitized again and double securitized and triple, quadruple securitized backwards and forwards.
Right, so we have to hope that besides just raising rates, we've already done, mortgage rates will go to 5.2, say, when they raise rates in December, that they actually start enforcing it on banks. The banks that I deal with keep saying, well, why isn't the Fed enforcing this? Why aren't they going after the guys who are low and no doc? Why do they make that happen again?
I know why. What's the answer?
The answer is that they don't seem to realize they have the power, or they look. Powell flagged it right at the top. So what I'm hoping is he will call all the different Fed presidents, all the people who the enforcers, the regulators, and say, listen, that's it. The non-banks, I want them to have the same exact standards as J.P. Morgan and Bank of America. If he does that, we could avoid not a crisis because we have a good balance sheet, but that's what he's worried about. And he should be, because the price of housing in many areas of the country is falling double digits. People don't want to talk about it because people don't like to ever talk about the fact that their house might be losing value. But imagine, you can't sell your house right now. Let's think about this. If you're in one of those areas where let's say that you don't get the state and local tax deduction, you now have to have someone who's going to has a 2.5% or 3 mortgage step up and get a 5.25% mortgage to buy your house, and you bought the house with one of these low doc loans, and now it's who may not have the loan.
I mean, am I going to have to brush up on all of my? I find it hard to imagine the coming crisis will be the last one. They never are.
Look, if he hadn't, I mean, I've done a lot of work. I
remember having conversations with even Greenspan about what he felt was perhaps not necessarily the Fed's place to regulate those non-bank
Well, that was
lenders.
very much, and Bernanke didn't think it was either. Of course, that's completely untrue. I mean, you go to Jamie Dimon, and Jamie Dimon will say, listen, we have high standards, and they're all over us. Why are they not all over the lower standard people? And the answer is that there's an inconsistency. Again, I think you and I are far more critical of what the government can do. There are a lot of people who come on air, and they think that what the government does is right. That's not necessarily the case. It's okay to criticize leaders of our country who are unelected, by the way, who don't seem to understand that they control the situation.
I'm glad we've had at least a brief conversation, and you pointed out the beginning of the speech. Now let's get to what everybody else cared about, which was just below. Did he correct the record? Is it sort of setting a new stage, or are those who sort of, in the analysis that follows today, of course, and late yesterday, say, really?
No,
he really
did.
change?
I mean, he changed his wording. You can parse things. I mean, before he was talking about overshooting in order to calm inflation, and the interim oil's going from 80 to 40 now. Well, drip down 80 to 49. Christmas, by the way, can we just point out that high-end Christmas sales were lousy? Over the Black Friday week, they were lousy. That's an interesting piece of information. David, we know the automobiles. GM doesn't lay off 15,000 people. Those things are robust. Ford announces reorganization. It wasn't clear to me at all how bad it is. We have most of the commodities that are coming down. We have housing had the slowest numbers in a very long time. So what's good? Okay, well, geez, we got unemployment claims. So this morning, everyone's talking, jabbering about all the good news about consumer spending and what the consumer has in their balance sheet. David, I'm looking at the claims. You see, once again, the claims. Let's just get them up for a second. Yeah. Your claims are 234,000, up another 10,000. I thought that this was supposed to be the season of hiring. So I think what's happened is all Powell is saying is, look, I got to put through another rate increase, but then maybe we ought to check it out. That is just prudence. And there are so many people who think that he wanted to take an imprudent strategy of just putting it on autopilot. Jay Powell is much more thoughtful than that. He didn't necessarily speak. He was, let's say he was not artful in the way he spoke. Right. But I just think he's proving to be the statesman that I knew him as before he got Fed chief.